The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Morning, folks. Tommy O'Brien, TFNN. My dad, Tom, is traveling for the day, so I'm fortunate enough this morning to be joined by our man, Basil Chapman. Basil, good morning. That was a great update.
Thank you. How are you doing?
I'm doing fantastic. How about yourself?
Very well, thank you.
Good. So let's jump right in. We got the Dow up 13, S&P relatively flat, up 0.5. Overnight, of course, you had the unfortunate terror attack in Manchester, and our thoughts go out to everyone out there. The FTSE up for the day, and foreign markets up for the day, kind of not being affected by that. And, of course, we have our VIX, the lovely VIX, back under 11. Let's see, 1092, holding there strong. We're talking about premium. We're talking about premium in the markets. Let's go over and talk to our man, Kevin Hinks, TD Ameritrade, Thinkorswim, every day at noon here, talking options. Kevin, good morning.
Good morning, Tommy. Good morning, Basil.
How are we doing this morning?
How are you?
Good to talk to you guys.
Good to talk to you as well. So, what do you think about these markets, Kevin? We had last week, of course, some volatility. Finally, you know, the VIX peaking above 16, and then back to where we've been. Kind of, you know, you look at the S&P. I was just pulling it up from where we were when that VIX was up above 16. We're now, you know, 50 points higher from that low, just 23.44 last Thursday.
I'll tell you, as a trader of volatility, and someone who's watched the market for quite a while, and let's face it, Tommy, there was a fair amount of complacency built into this market. So what last week showed us is don't fall asleep on implied volatility.
Right? I mean, 400 points down in a heartbeat almost on the Dow.
Right. A lot of people, you can look at your calendar and see when a lot of events are coming out. But some events aren't on the calendar. And that's why at Swim Lessons we teach fundamental trading. And just FYI, on Wednesday when the market made a big move, Scott Connor and I at the Las Vegas Money Show had just done a presentation Tuesday night about implied volatility and trading long Vega. So the timing on that discussion couldn't have been better, and I spent all day Wednesday saying, you know, it really doesn't always work this quickly. Like
I remember saying to my dad the next day, Kevin, man, that must have been an awesome time to be able to do that workshop, because we had talked to you that morning, and I believe you said you were doing a presentation in the afternoon, and I said, man, what an awesome day to be presenting, for sure.
Right. So what it is, you know, trading volatility is really a lesson in fundamentals, right? Figuring out the right strategy for the right level of implied volatility, both high and low. And, you know, there's a lot of strategies. There's calendar spreads, right? There's diagonal spreads. All these different trades that give you long implied volatility. So that's what we try to do. We're not overly technical at Swim Lessons. We basically tell people to trade the mean reverting aspect of implied volatility. And that's what we talked about Tuesday, and, well, it was one of those, like I said, it doesn't normally happen that quickly.
Sometimes you're rewarded more quickly than others, right?
Right. All this market did was remind us that out of nowhere, and they're not going to ring a bell when VIX is about to spike up. So, yeah, it's just an interesting day. But now we're back. You know, that was a very short-term crisis there,
it sure
and
was.
We're right back to where we were, and I'm looking at a 1081 on the VIX.
Yeah, you know, and what I found, I was thinking about it this morning, Kevin, coming into work, and I was thinking, you know, nothing has changed from that kind of fear that jumped into the market on Wednesday and Thursday, you know? I mean, you had the revelations politically and whatnot, but that's still lingering, and it was just amusing where we could get one day of a reaction, whether it was an overreaction, right? And then it's like, we're okay, now there's like a special prosecutor, so is that what calmed it down? I mean, many times, you know, it'll just be kind of the market, maybe it's waiting for that final straw where you get a few days like that, or you know, one final trigger to kind of send fear through things. I just thought it was amusing where, you know, we're 3 days removed and somehow that seems like forgotten.
Right. And I think people are really keeping their eyes on, the macroeconomic effects of what's going on in this market. I mean, I think the more important thing to look at right now is the dollar.
Sure, yeah,
and what's
huge
been happening
moves,
with the dollar and the amazing move on the dollar. And, obviously we've got oil now trading over 51. Well, we got an OPEC meeting coming up.
Right.
So that's going to be interesting what comes out of there. So, oil had some nice big moves last week because why? Not necessarily a supply and demand issue, but a rhetoric, right? And you have to learn to trade that too. Oil has rallied based on OPEC's comments. So we're doing all these things. We're trying to get everyone ready and just.
And you also had Trump talking about the reserves this morning too, right? Which even adds more to that, saying maybe we'd sell half the reserves, which added some volatility, and it's rebounded. I mean, that's seriously 50 cents down, 50 cents up is nothing almost these days in oil. Yeah, imagine. Think about, he talks about someone who may know the direction of supply and demand going forward, right? And if he's an administration that's going to improve everything in terms of pumping oil, he may have a handle on supply. On top of pumping a full supply of half the reserves potentially in the market at the same time, right? That would be pretty powerful. Right. My gut tells me that moving forward, oil's not going to be a supply issue. Sure. I think there's going to be plenty of supply of oil. There's a lot of rigs if it goes higher to turn that spigot back on too, right? Exactly. All right. To talk about those. We got plenty to talk about, man. Kevin, thanks so much for joining us. We appreciate it as always, and we look forward to the show 12 o'clock here every single day, 5 days a week at noon for swim lessons. Basil, Tommy, always fun having on. Thanks so much, Kevin.
Thank you, Kevin.
Okay, folks, come on back. We'll be right back. We'll take a look at these markets relatively higher.
Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome, folks. Tommy O'Brien, Basil Chapman. So we have the markets relatively positive again today. Basil barely, Dow's up about 15. S&P, let's call it almost even flat. The S&P got quite an acceleration overnight too, but pulling back slightly off of those overnight highs. It looks like that was maybe when Europe was opening. We got a run up to about 23.98 almost, pulling back to about 23.93, still almost 50 points off of those lows from last Thursday. So staying on oil, Basil, I saw you talking about in the den maybe on the monthly basis. Why don't we take a look if we could, because I was interested in that on a monthly, maybe I saw you mentioning a peak M, plenty of oil potentially in the market, right?
So there are a couple of things that we can do right now. First of all, let me just explain for anyone who's new to my work. The Chapman Wave objective is to go from the lowest low bar merely to count each successively higher peak, 4 peaks higher. I alphabetize them, uppercase on the way up, lowercase on the way down. Fourth highest peak is peak D. Other things can happen there, and it can go all the way to G. But D is where you have to do the easy part is to get to the 4 higher peaks, and then other things can happen. That's where you need other techniques.
Okay.
What are we looking at? We're looking at in the crude oil daily chart, we went to a peak D, the 4th highest peak, back in late May, pulls back very sharply from the 54s down to the 44s, and now we're trading at 51. Where are we? We're in a leg D, and it could possibly be a peak D today in the daily chart. And what's very interesting is I like to see the Ds take out the left side high, just spiral through it. If it's underneath it, I call it a gray D, meaning that it is in a retracement failure mode. That's an explanation. That isn't judgmental. It's just explaining that when you are rallying, well, not you, but whatever it is you're following,
sure.
when it's rallying and it goes to the 4th highest peak, if that highest peak is really way below the previous one, it's not showing tremendous strength. And if you look at the way the stochastic, the red line, this is the daily chart, has powered higher, and the MACD has been good, but nothing like it was when it went to that high in May, what I'm looking at is that some of the internals are starting to show that you're usurping energy, ironically enough, crude oil, usurping energy, and you haven't even gone above the 200-period exponential moving average. It also happens to be the 200-period simple moving average, these orange and light blue lines right here at 52.19. So that's the first step. I like to look at stages because the short term, in this case, is the daily. Daily says, still very good action, stochastic at 94%, fabulous, but you haven't spiraled on the left side. Even this very ugly candle, you remember when crude oil just slumped on the 19th of April from 53 down to 50 to the 50.80 area. It hasn't even, it's just started into that bar. So that's the daily. Daily says good action up till now, but not great. The weekly chart says, well, this is just a bounce. I mean, if I'm going to squeeze this a little bit and you'll see. This is just another one of those arch formations.
Okay.
And the MACD is turning up, but it hasn't done anything yet. And stochastic is okay, but it's only at 36%. So that's really not showing. It isn't showing in the engine itself. It isn't showing that there's tremendous momentum. There is some torque off the lows, but you haven't translated it into momentum in the moving averages of importance.
And I see those lines almost forming some nice trends towards the downside, correct, on the up and...
Absolutely right. So we still haven't broken the downtrend line, which is up at the 52-ish area. So now you get to the monthly chart. And I'm going to open this up a little bit more, and you'll see the letters and the patterns look like they've slipped, and that's exactly what happens because this is the crude oil continuous contract. It gets smoothed out. Every single peak and trough is exactly correct, but the price has changed because it gets smoothed out.
Sure.
So what we're looking at is this lowercase h, which goes to a lowercase m. It's a pattern that in the Chapman Wave methodology, in my CD introducing the Chapman Wave methodology, I talk about quite a bit. What happens is you're basically looking at a rectangle formation that takes time, takes your patience. We saw that right there. I actually drew this as a gray line. It was back in 2011 from about July all the way to the breakdown in 2015. there was really a sideways trading band, and that can last for a long time. That's what we're seeing here. But it's happening at the lower end, so that every technical picture has not yet broken the pattern to say, okay, now crude oil is trading the 62, 63 area, and that's a breakout to the upside. My contention is that, as Kevin was saying, there is plenty of crude. It's just rhetoric that we're looking at. This is rhetoric here. It says, you know what, there is an abundance of crude, and they can do whatever they can say, whatever they want. When you've got essentially a glut of anything, it keeps prices down. It becomes commoditized, and that's really we're looking at. Instead of being something special anymore, you've got solar energy, you've got all these different alternatives. You're looking at automobiles more and more. I'm seeing you're getting the crossovers so that they have a mix of the regular combustion with the battery power.
Sure, so mile per gallon standards are going up regardless of how much, is the only debate in terms of, 40, 50 miles per gallon is coming even for, cars still just using gasoline and some type of combination, like you're saying, capitalizing on, energy, gaining energy from braking, right? All that technology that's coming into things.
Absolutely. Yeah. And not only that, when a technology becomes obsolete, when your horse and shoe for the horses and your horse and carriage is overtaken by an automobile, literally and figuratively, it changes the dynamic. And I suspect that when we talk about fossil fuel, we're talking about crude oil at some point in the future really becoming a fossil.
Yeah, it's not going to be for automobiles, that's for sure, right? That's definitely changing. I mean, it's ironic that it's timely, let's call it, that yesterday you had the CEO of Ford basically getting fired, right? They're bringing in the guy who's in charge of right now their automated, or I forget what his division is called, but it's their new division in terms of automated and electric vehicles, something like that.
And you also technology,
have right, yeah, and then you also have Tesla with the biggest market cap of them all. So that actually speaks to exactly what we're talking about.
And what's really interesting about this is that if you look at Tesla, and I must admit, maybe it's the Boston area because we've got so much in the high tech and the biotech, and people are doing so well. But Tesla is saying to me that when you put it together and say that Tesla's the capitalization and the sales are I think if you had to put the two together, you'd probably find that every car has cost maybe 300,000 or more.
Sure, no, they're living on a dream right now, right? I mean, they are for sure. But sometimes those dreams come to fruition, and that's what they're banking on.
Yeah. That's right. And not only that, if you're looking at the not the market capitalization, if you're looking at the price, Wall Street works on reaction and action. And at this particular point, the sexy stock is Tesla. It was the cutting edge technology. In many ways, even if you think of it in terms of solar, it's still cutting edge technology. So that's why the price. They have a dynamic
figure as their head. Elon Musk. Absolutely. He takes risks for big ideas, right? And so.
And not only that, the big ideas in many ways. He's a little bit like Edison because the rocket, the SpaceX, that is doing some fantastic stuff.
It's pretty remarkable that a private, citizen, private company. He ran PayPal, and brilliant man. But yeah, that he is actually changing space travel, which is pretty interesting that you can have that influence.
Right.
Right. Okay, folks, come on back. We'll see what else we have going on in this market. Basil Chapman, Tommy O'Brien, we'll be right back.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Basil, I see we're taking a look at the S&P on a 2-minute chart. Tell me what we're taking a peek at. I like these short-term trades. We jump around and trade some of the 2-hour binaries or spreads on Nadex sometime. So what I see peak D, and we just went over 4 peaks. Talk to me what's going on.
So we've just had from the low that was made in the 2-minute chart right here at 2 minutes past 10 at 23.92, nice round number low. There have been 4 peaks. So this is where I start to look at the MACD. MACD is still good. Stochastics at 90%. But there's a sign that it's starting to bump into some resistance. My thinking here is that I'd like to put this together. I want to just show you something very quickly. In the 120-minute chart, what I said to subscribers to my opening call this morning is that we should expect a move above the high of peak C that was made yesterday in the 120-minute Dow chart at 20,914.26, and that'll start leg D. If the where leg D stops, and I said 20,920s to 20,940s is the area we'll be watching, and actually the high so far today is 20,941. What we want to be looking at is the V-shaped recovery. It's really important when you're looking at patterns that you understand the obligation of a particular pattern. The V-shaped pattern, if it comes off the bottom in the same accelerated move that it went down, then from the midpoint, what I call the fulcrum or the plumb line, in this case at 11:30 yesterday, you want to see the price come back to important levels in the same speed. What you can look at right now is that there's a slowing down. It has been quick, but there's starting to be a slowdown between the peak B, the peak C, and now there's potential for a peak D. So I'm going to be watching that very closely. So now I've got the 10-minute chart in leg D, I've got at a peak D, and I've got the 120 in leg D. However, if you look at the same chart with the MACD and stochastic included, you'll see the MACD is still very strong. These are the histogram. These are the vertical lines of the 0% line that says that the 2 moving averages have gotten to a point where they've crossed over, and in this case went positive, so it's the green line to the top, and that says good action, stochastics at 95%, 96%, and that says okay. Now what you've got to do is say, the flattening of the stochastic, and this is the 120-minute chart, The longer it stays flat, especially in the mid 90% area, the greater chance you're going to push higher on whatever price you're looking at. The quicker it starts to pull back with the price, look for support. So that makes this 9-period moving average of 20,000, let's call it 20,860, as very important support. And the breakout to the upside in this leg D says, okay, you've got to consider that at 20,929, it's just a hop, skip, and a jump to get to the 21,033 level where this downtrend line is. And this downtrend line has been quite formidable for a while. So now we can go back, and if you're looking to trade on, say, on the platform where you can look at both sides, then my thinking right now is that I would be looking for later in the day for us to be pulling back from the 23.95s area. We actually went to 23.96, and if 23.93 is taken out, there's a real good chance you're going to test this low of 23.92. So that's what I'm looking at on a shorter term basis. My eye tells me that from what I'm looking at in the Russell 2000, which is pulling back, the way I'm looking at the overall market at this particular point, I think it becoming somewhat toppy for our subscribers. We still remain short the Dow, and I'm thinking that there should be weakness towards the end of the day. So I don't know how you would play that in terms of looking at. You know what I find most interesting, what I try and wrap my head around, right, is like, let's say that you do get a pullback from here, right? If that were to happen, what I'm always trying to understand is how big of a component will the juggernaut stocks like Amazon, Facebook, Microsoft, have to be, because they are just so dominant in their earnings, and I don't see them on an earnings front being hurt or really not delivering. Apple's new phone, I myself fundamentally, personally, I have a 6. I've bypassed the 7 because now I'm going to wait for the 8, right? They're having the grade 8. And so I see a lot of people. That's where the biggest difference, right? That's where the biggest difference should be, because the other one was really an upgrade. And they had some problems with that for their earnings, as in they kind of underperformed, and you tie things into a personal level, and sometimes it makes sense. I'm a huge Amazon fan. We've lived off it. So let's look. So what we've got here is Apple, and there's a pattern that I call the right shoulder failure. I think I've got a down arrow in Apple from 156.65 on the 15th. Very strong 3-day pullback. A nice retracement, but the MACD and stochastic are very weak. The weekly chart has to depend on the rudder of the shorter term. The shorter term says to me, I'm going to draw this in and we'll check it out over the coming few days. I'm putting in an arch formation. Okay. And I'm suspecting that before Apple takes out 156.65, it's going to test the 152.10 level. So it's at 153.92. So that's 3 points. Let's actually make it even better. I think it's going to test the 151.50 level before it makes a new high. In fact, if it takes out 151, it's not going to make a new high in this particular phase. So that's Apple. Let's look at Netflix, NFLX. Okay. Netflix made its peak on the 15th at 161.78. Exactly the same. Pretty similar, pattern. Yeah. Now watch, this is going to be very interesting. Look at Google, because Google was slightly different. It yesterday was retracing its high, and it's made a new high. I'm still only going to call this an F, not a brand new A. If it's an A, it means that Google will actually go higher all the way through the rest of May. I don't think so. I think Google is starting to get a little toppy. I would not be thinking of this as a short, but I would definitely say watch it closely. So now you've got, what are we missing? We're missing Facebook. Facebook, the FANG 4. Look at that. Made its top at 153.60 on the 3rd of May. Hasn't been able to climb anywhere close to it. It's trading at 148 now, 147.50.
Excuse me. Sorry, man.
You see, bless you. So what I'm looking at here is, if you look at the cues, this is a really important session. In fact, I'd say yesterday, today, and tomorrow are the most important sessions for this particular phase, because I think this is going to be a right shoulder failure. I don't think the cues are going to make, if they do, it'll just be a squeak to 139.70, 6 cents or so above the all-time high that was made on the 16th. I think this has also got the potential for an arch formation. I'm watching it closely. So when you actually try to put it together, it's funny, it's exactly the same. Look at GE. Has had a tremendous drop from the 33 round number high back in July of 2016. It's made what Tom likes to talk about. He talks about the A to B equals C to D.
Sure.
This is that extension to the downside in the weekly chart. It's trying to really have a very nice takeoff from the low that it made at 27.10. 33 to 27 is not a big deal, but it is a big deal for General Electric. It's a huge company, and it's kind of telling us old school. It's not actually working in this particular case. And if you look at IBM, I had an email from one of our listeners to say, what about IBM? Isn't it coming off the bottom? No, it's looking terrible. Triple M. So I've got the same thing that you're looking at in the top 4 or 5 we were looking at in the top NASDAQ type stocks going on in the my Dow Quartet, GE, IBM, Triple M, and UTX.
Pretty remarkable, man. Lots of formations. We'll see how they shake out. Okay, come on back, folks. Basil Chapman, Tommy O'Brien. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. And Basil, real quick, I just wanted to talk about, because you talk about it sometimes, if people would like to access your book, introducing the Chapman Wave methodology. So I've just pulled it up on the website.
Oh, great.
You just go over to TFNN.com and you'll actually see the tab at the top, Tiger Store. You click the Tiger Store, that brings you over, and right here, introducing Chapman Wave methodology, Basil Chapman. Sign up for that. We can get it shipped out today. And a brief kind of description of what you go through there, Basil.
Well, it's, I think, 27 chapters. And what I do is I talk about these particular patterns. I talk about the cup pattern. I talk about the V-shape pattern. I talk about the arch formation. And basically, let me show you something right here. I could do it probably on almost any chart that you wanted. I'll just pick this one right here. So here is triple M. There's a big W formation. I talk about how these cups, remember I was talking about just a moment ago. Let me go to the S&P. This is a good example. The S&P has I'll go to the Dow. There we are. So in this particular pattern, I talk about something that like a cup, like the H pattern. This is the inverted H pattern. There's a left side, right side price time match. You can count the number of bars on the left to the number of bars where it will retest the high. So that's essentially what we're looking at is patterns that repeat. They are fractals, and they repeat in all time frames. That's the fascinating thing about it. And most importantly, if you think of patterns as either a straight line, up or down, an arch, or a cup, those are the three patterns we're dealing with all the time. Now, the cup can turn out to be a V, but it has the same purpose. It goes from the left side lip high, goes down, and comes right back to test that. And if it's an arch, it has the base, and it comes back. So those are the patterns I talk about. Give them nicknames. We could talk about the dreaded HY, because when something like, here's a stock that I tried to short yesterday for subscribers, didn't work. See this large arch formation? What I also talk about is patterns that repeat, and you can see all these different arches. And look at this large. I can now draw a very big arch on Orly. This is O'Reilly Auto. Is down 10 points right now. And look at this. If you within the same chart pattern, you can get a variety of the same formation in different sizes. And that's like a fractal. It means that that same pattern just gets repeated in a different size. So I talk about that. I talk about how you can trade them. I talk about what you can do. I talk about.
And you said how many chapters is it? Just so, and I went through it. I just know how substantial it is, because how many slides is it? I mean, it's really, you've put everything.
It's about 400 and something slides, and it has a huge glossary at the end. It was very comprehensive, and funnily enough, it was done back in 2005. But there are only a couple of things that I've changed over the years. I've modified really rather than changed. And one is where I talk about if a price comes back to the left side low bar, hits it exactly, doesn't break it by a penny, but hits it exactly, and then starts up again, you can keep thinking that you're still in a buy mode. Before, I used to say if you come back to within a certain percentage, you got to restart it. Then I found over the years, you know what? No, you just keep counting every single peak and trough, and you look at them in their total package, and that's what really makes sense. And the 6 highest peak F is really where you got to be careful. O'Reilly made a peak F at 292.84 in July of 2016, and look at the sharp move. And if you want to go, you can go to the Dow 2000, and let's go back. You'll see the Dow right here in 2007. Where are we? 2000. There it is. 2007 at 14,198. It was a peak F top. And there's a doji candle. I'll talk about the candles, and that was the major high for the Dow. So these are patterns that we look at all the time. We just did that in the 10-minute chart. Remember?
Sure.
Yeah,
they work on all time frames. That's for sure.
Right.
That's for sure. Everything, history repeats, right? And it repeats on multiple different time frames.
That's because human nature is not going to change.
I agree. That's like a fundamental just life where, yeah, I mean, people are people, right? And they make similar mistakes, similar decisions. History can repeat. Greed, fear, all of that stuff. It's all present all the time.
And when people say to me, so what about high-frequency trading and all that? I say, you know, the machines, at some point, the machines will change things, but right now, human emotion is the most important factor in the market.
There's still people controlling those machines to a certain degree level, in terms of buying positions, holding funds. Yes. Yeah. So come on over, folks. Check it out right at the front page of TFNN. Just hit that Tiger Store banner at the front page at the top, and get over there and check out Basil's CD. Awesome CD. So what else have you been talking about in your newsletter, Basil? I try and check it out occasionally, but I'm not in there every day.
So the couple of things that I'm talking about. In fact, on the weekend, I spent every weekend I sent a lot of charts out because people have time to look at these things. Just trying to find this right here in the middle. There you go. So what I said to subscribers over the weekend is that there's a pattern. If you look at the low that was made after the August high back in 2016, and you had that sudden smash to the downside on the 9th of September, I think we were in a matching pattern.
Okay.
We're talking about matching patterns. So forget about prices. Just half close your eyes and look at these charts, right? These patterns right here. This long rectangle pattern, it was really a trading band with a down, within a slightly, what would I say? Within about let's call that a 12% degree
declining channel.
Channel. Okay. And it took from the high that was made July the 20th of 2016 daily chart to the breakout of the election day. This was
pretty remarkable how far we've come since then. Go ahead.
A day or two before your pup's birthday, my wife's
That's right.
birthday,
You know
actually,
it exactly,
right?
and your wife exactly.
Right, and bam, we spiraled up. Now, once again, kind of half close your eyes. There's a pattern that I call the Chapman Wave stalk leg formation where the price goes not a rectangle, but it is an oval. And it says if it breaks out to the upside, be careful for the test on the inside, and it's exactly what we get. But if you look at this as a propeller shaft, you can get a one-to-one expansion to the upside. If it fails below the one-to-one expansion, then think of it as forming, once again, a sideways consolidation. Well, the one-to-one expansion would have gone to the 21,740 area, but no, we failed to 21,169 right there on the 1st of March. And look what's happened. Same thing. Now it's not the rectangle, the oval. This is very much the rectangle pattern. So I think we just stuck. And I think that we're going to see slightly lower lows, slightly lower highs, and slightly lower lows, and this could continue for a little while. The only way it'll change is if for some reason, and it has to be a trigger that holds price. It can't just be a one-time pop. If there is a move into this area here, maybe let's call it 21,280s to 21,320, there's a price move that holds in the Dow, that's going to be something different. And that would say we're in the acceleration phase rather than continuing this digestive phase. And that acceleration phase says, wow, stand back because we are going to go much, much higher. I think we're in a consolidation phase. This is just matching too much the pattern that we were looking at from August of last year into the November low.
It's pretty remarkable. I mean, I just look at some of the PE numbers, right? We're approaching not historic levels, but pretty high in terms of where the median, the usual is, right? And up 20% since the election, and a lot on future sentiment, and we'll see if that comes to fruition. Okay, folks, Come on back. 5 more minutes in the program. Basil Chapman, Tommy O'Brien. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Gerald Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Market continuing to stay relatively higher. We have the S&P up a couple points. Dow's up about 30. And what are we jumping to, Basil? Some semiconductors, maybe? Taking a look?
Yeah, I think that for the market to, we might find that there's a rotational correction that's going to
I've heard you talking about this. Go ahead. Right. Yes.
So, well, what is a rotational correction? Back in the summer of 2000, we were very fortunate. We went long the Dow at the exact day of the low, the 6th of March, via the diamonds, and we held that for about 18 months. But in the summer of 2010, what I noticed was that instead of having what I call a Granville decline, Joe Granville used to talk about 97% of stocks pull back in a bear market. What happened was that the weakest stocks started to strengthen, and the strongest stocks took their break, took a timeout.
Okay.
And that held the price in a high-level consolidation. So this is what I think is happening now. The semiconductors are becoming extremely overbought. They're still a fantastic group. The monthly chart is still very strong. But on a shorter-term basis, I believe that if the semiconductor, the SMA is trading at 84.05 right now. Look, there's a rally that failed. It didn't go above 84.77. That's that right shoulder failure pattern we're talking about. If, in fact, at 84.05 by Thursday, if the semiconductor index is trading under 83, preferably under 82.71, all of a sudden you've got the best sector starting to take a timeout. That includes Lam Research, it's applied materials. This is very important because if they take a breather, you might find that some of the, and I was going through the Dow, my Dow Quartet, GE, IBM, Triple M, and UTX, you might find that Triple M and UTX have been fabulous in this retracement, rallying almost, well, one was to a new high, one was almost to a new high. They will take a breather, and maybe you'll find the GEs and some of the laggards take over, and you might find other sectors. Who knows? Maybe this time the IBB, the biotechs, will rally as the semiconductors pull back. With Intel and the Dow, you're going to find that maybe there's enough mix that it holds the price of the Dow. And that's why I don't think, that's why that pattern I was looking at says slightly lower lows, slightly lower highs, says that we could be in a trading range as this correction, which is 11 weeks in the Dow, 11 weeks already in the S&P, even though it squeaked to a new high. I think we might see that the rotational correction keeps the prices fairly stable as some of the overbought sectors take a breather. So that's kind of my thinking at this particular point.
It is remarkable that we're 6 months. I was thinking about this morning, too. 6 months past November in the election, which seems like almost yesterday in terms of how much influence it's had on the market on almost a permanent basis of every single day, talking about expectations or market move.
With a daily attack on the president, right or wrong.
It's a constant, and it's going so quick that it's stayed at the forefront of everything. And it always ties into how this will affect the market if you're in the market. And now we're 6 months past that, and we'll be a year past that date very soon. It's just interesting how time does fly like that. It does. Okay, so Basil, what are you jumping to on your program? We're coming up here at 11 o'clock.
I've got a number of questions that have been asked. I'm going to deal with that. I'm going to look at rates. I'm going to talk about bonds.
Perfect.
I talk about the yields, even the
tying
yields.
in with the dollar, I'm sure, right?
Exactly. I'll be looking at the dollar and gold. We've been looking at that in close proximity, and talk about time flying. Can't believe it's over.
I know, folks. Get on the line and call Basil next hour and talk to him about what he has going on. 877-927-6648. Basil, always a pleasure doing the program with you. I appreciate it, and have yourself a great show at 11 o'clock. I'll be listening.
Thank you very much. Always appreciate it. Thank you.
Okay, folks, and stay tuned. We got a great day of programming. Basil Chapman, 11 o'clock. We got swim lessons, options, great day. We'll see the premium, the VIX still under 11, Basil, right? Pretty remarkable. No fear in the market at highs.
No fear.
And then, of course, Dave White, Steve Rhodes. There's going to be guest host live. I believe Dave White and Steve Rhodes combining for the Tom O'Brien Show. And then, of course, Andy Hecht. It's Tuesday, the Commodities Hour, wrapping things up. Basil, have a great day. Thanks again.
Thank you very much.
Thanks, folks. Stay tuned. Basil Chapman coming up right now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.